Okay, just a quick sound check and then we can get started. Welcome back, everyone. Second half of 2023. This is July. We're going to take a look at gold. Very special case on gold, so we are definitely going to take a look at gold. But yeah, welcome back, everyone. Audio seems to be good on my side. We can get started. Just a quick reminder, this is going to be news trading on payroll on the NFP numbers. But we'll take a look at a few stuff as well. As usual, we'll go through some of the understanding of what the NFP is, what is the unemployment numbers, and some of the wages there, as well as the potential numbers that we might be able to take a look at. Several ways to trade the NFP numbers, and I've already got one position running on the NFP numbers, and we'll get that once we go through some of the introductions. All right. Just a quick disclaimer with any webinars, any opinion, news, research, prices, analysis, or other information discussed in this webinar or link to this presentation is provided as a general market commentary and do not constitute investment advice. Past performance does not reflect future performance, so just keep that in mind. This is a general advice. This is not a personal advice for you as a trader. You make your own decisions on this. But yeah, let's get this rolling. So obviously, there's going to be a deposit bonus. That's going to be double your deposit bonus. I'll give you the code later on. And then if you do register via email, you should be getting your access to the Telegram channel that's already been up and running with a few trading ideas every single day. All right. So about me, we'll go through this very quickly. I've been trading for basically 21 years. Started 2022, but really full-time since 2004. Basically just been providing education and mentorship since 2007. I've also worked as a financial as a technical analyst for several brokers in the US, Australia, Japan, UK as well. I guess that would count, right? But anyways, been quoted for any news commentary. You can Google my name on YouTube. You can find those videos as well if you want to. There are several articles that are posted out, being quoted at times, Bloomberg, Reuters, and stuff like that. All right, so let's get started with what we're going to talk about tonight. We are definitely going to talk about the employment numbers from the Bureau of Labor Statistics. This is different from the ADP NFP that was just released yesterday. So definitely different. This is kind of the official government number, okay? Obviously, we are going to focus on two things: the NFP numbers, which is the non-farm payroll numbers, and the unemployment rate. And they are very different. They look at different things, and the way we read them is actually kind of the opposite, right? So good NFP has to be accompanied with lower unemployment numbers to be good. High unemployment numbers is going to disrupt good NFP numbers. Like last month, we saw that happen last month. I'm also going to talk through a few examples since April in terms of the NFP releases, what happened, what's likely going to happen again. All right, some trading rules to go through before we go through our live trading session as well. I think we got the hang of it by now. This is the third time we've been doing it. So this is the third month we've been doing live NFP numbers. And on Wednesday next week, we are actually going to be doing live CPI as well. So by now we should have enough time to go through a lot of the stuff here. All right, so who is the Bureau of Labor Statistics? It's a federal agency that collects and disseminates various data about the U.S. economy and the labor market. Also, its reports also includes the Consumer Price Index, or the CPI numbers, as well as the PPI, or the Producer's Price Index, as well as the Personal Consumption Expenditure as well. But the PPI and the CPI, it's considered to be very important measures of inflation. Now, in the data from the labor market, the most interesting are the number of people employed outside of agriculture. This is what we call the non-farm, and that's why it's called the non-farm payroll, as well as the unemployment rate number as well. So at the beginning of every year, the agency actually publishes a calendar with all the release dates for the entire year. You can actually go to bls.gov to actually check it out. Unemployment data actually published every first Friday of the month. If that day is a holiday, several case happens, right? I believe the last a Good Friday, which is kind of a public holiday, it was still released anyway on that Friday. But if that day is holiday, then the publication is more often postponed to the next week, and very less often to Thursday of that week. Very, very rare for that to happen. Inflation data, or the CPI and PPI, is usually published next Wednesday after the labor market data. It could be on Tuesday as well, depending on the dates as well. Also on February, sometimes we get it on for March. Sometimes we get it on the first week of the month. Sometimes, typically, we actually get it on the second Friday of the month, just because there's not enough days to cover the February numbers. All right, so non-farm payrolls. This is actually the way to look at jobs added or lost in the market. Again, it's kind of taken through a sampling method, so I'll go through that in a minute. The NFP report is basically just a monthly release by the BLS that measures the number of jobs added or lost in the US economy, non-farm, excluding farm-related jobs, private household employment, and non-profit organizations. Market analysts and investors usually look for NFP figures above 200,000. This is a general take on this one, but we kind of need to go through it on a monthly basis in terms of the context on when that number is released. But generally, 200,000 is a level that we are looking at, right? Anything above 200,000 is considered to be a positive sign of a healthy job market and a growing economy. Again, the interpretation of the NFP data can vary depending on different economic factors and the context in which it is released, okay? NFP data is also a crucial indicator of the state of the US labor market and can significantly impact financial markets. Obviously, this is one of the bigger key moving markets. Not for the past 2 years. I think for the past 2 years, the inflation number has been the number one moving markets instead of the NFP numbers. But yeah, we still look at the NFP numbers as one of the key impact that could actually move the market significantly. A figure that falls below the market expectations may be viewed negatively, while one that exceeds expectations may be viewed positively. As such, the NFP figures are closely watched by traders and investors, particularly in the forex market, where currency pairs like the Euro USD, dollar yen, dollar CAD, pound USD, dollar Swiss tend to exhibit high volatility in response to the release of the report. So the release date is kind of special time for many traders who have learned to successfully use special non-farm strategies. There are several strategies that we're going to talk through. In fact, there's actually 4 different ways to look at it, and we are going to discuss that. So, after the release, there are very strong changes in quotations and even trend reversals. Algorithms of technical analysis kind of stop working as well. So we need to take a special care when we trade the NFP numbers. It just doesn't work like any normal news releases. It's very different. All right, so according to the BLS, on-farm employee classification account for approximately 80% of US business sectors, contributing to the GDP numbers. And the best assets for non-farm trading, obviously, we talk about this, are the majors. Anything to do with the US dollar has a high impact. Euro USD, dollar yen, dollar Swiss, Aussie USD, New Zealand USD, dollar CAD, very high signs of volatility. Also, gold's included. The yen crosses are a little bit unique because yen crosses are more of a secondary impact on this. These numbers have kind of secondary impacts on the yen crosses. So the yen crosses are a little bit unique. If you're trading the yen crosses, they are likely going to react differently depending on what's really pushing the market, whether it's actually going to be the stronger yen or is it going to be the US dollar. The dollar could weaken, but if the sterling yen and the euro yen get lifted up, the dollar yen itself could actually be supported as well. So it kind of works in a different way. All right, next one is actually the unemployment rate. The unemployment rate is calculated in the percentage point, and it's published at the same time as the NFP numbers. So a lot of new traders kind of focus on the NFP numbers. They kind of ignore the unemployment rate. I actually do have a lot more focus on the unemployment rate rather than the NFP numbers. To me, the unemployment rate is actually something that's more crucial than the NFP numbers, because the NFP numbers, in terms of its changes, it's really short term. But the unemployment rate kind of sticks to how an economy is branded. So this one here has more of a pronounced, prolonged effect in the market. Okay, so the unemployment rate is a proportion of the labor force that is not currently employed but could be. And that's the wording there, because the way we look at the requirements for it to be counted into the unemployment numbers is that this is based on a survey of approximately 60,000 households. And I know this is a very small number, but this is the sampling size that we were talking about. It's only surveyed from 60,000 households, and that's actually used to represent America. Kind of unfair, but that's how it is, because otherwise it's going to be a little bit hard to tally up the approximate. Now, according to the U.S. Bureau of Labor Statistics, to be classified as unemployed, a person must meet the following criteria. They must be without a job. They must have actively looked for a job in the past 4 weeks. They must be available to start a job if offered one. Now, criteria number 2, this is where we get that hints from the weekly unemployment claims, because if someone claims that unemployment benefits, that means they need to go to a center and they need to show proof that they are actually actively looking for jobs, and then they get their benefits. So the weekly unemployment claims tallied up, it kind of gives a little bit of a glimpse onto the US unemployment rate as well. So if a person does not meet all 3 of these criteria, they are not considered unemployed for the purpose of calculating the unemployment rate. So the weekly unemployment claims that you see every Thursday, that's just basically this. So you tally that up, you can actually get an approximate on the NFP numbers, whether it's actually going to be good, or you can actually kind of estimate if the unemployment rate is actually going to be higher or is it going to be lower as well. Right? And then lastly, we've got the US average hourly earnings. This is a lot to cover, but it's basically just the data to report alongside the unemployment rate. It measures the average amount of money earned by workers per hour in the US economy, and it's surprisingly very, very low in the US. Data is collected through surveys of businesses in various industries, and it includes both full-time and part-time employees as well as overtime earnings. So the number that comes out is actually subdivided as well, but we typically look at the average hourly earnings. But again, it can be classified as a part-time earnings number, full-time earning numbers. There's a whole lot more to the employment numbers than just the NFP unemployment and that, right? Even with the NFP numbers and the unemployment numbers, we actually subdivide it into races as well. It sounds a little bit racist, but that's how it works in the US. Race matters in terms of reading the unemployment numbers as well. All right. So the report is closely monitored by economists, investors, and traders, as it can provide insight into the state of the U.S. economy and its potential impact on inflation. So when trading the U.S. average hourly earning data, traders often look for changes in the growth rate of wages compared to the previous months. It's very typical, as this can indicate changes in the labor market and potential inflationary pressures as well. A higher than expected growth rate in wages may indicate potential inflationary pressures. This could actually lead to a wage spiral, which is some of the concern that we have in the UK and Australia at this point in time, which can lead to higher interest rates and currency appreciation. Conversely, a lower number than expected growth rate in wages may indicate weaker inflationary pressures, which can lead to lower interest rates and currency depreciation. So this is one of the most overlooked data that got released together with the NFP numbers as well as the unemployment numbers. Again, as with any economic report, it's important to consider the context and other economic indicators when trading the US average hourly earnings data. All right, so several strategies to go on to leading up into the NFP. Obviously, number one is the pre-NFP numbers. Pre-NFP trading. So you have a position before the NFP numbers, and I'll show you one example that I already have running on the raw Japanese yen. This is pre-NFP. I did my analysis on the pre-NFP numbers. This is a potential strategy to anticipate that NFP data releases. This approach involves opening position in the days leading up to the NFP release. For me, it's just hours before the NFP release, with the expectation that the market will begin pricing in the anticipated NFP outcome. Close your positions before the actual NFP release to avoid extreme volatility that can follow if you need to do that. I'm not going to do that. I'm actually waiting for the NFP numbers to be the trigger to take my trade a little bit higher. Now, I'm actually going to show it to you right now. So I already have a running position on the dollar Japanese yen. This is pre-NFP, and there are a few reasons that I'm actually going long the dollar Japanese yen. So from the weekly unemployment claims numbers that we have been getting and the release of the 4-week average, as well as the continuous unemployment claims since the beginning of the year, we actually saw a little bit of a drop in that number. So the 4-weekly average is actually lower than last month. Continuous number is also lower than last month, although the weekly unemployment claims yesterday was a little bit more than what the consensus is. However, right now I'm anticipating something more in the line of, the NFP numbers going to get released as per consensus. Let me just bring this up here. So we've got this calendar here, and we are looking at the NFP numbers, right? So the NFP numbers, its previous one was 339,000, which was a surprise for a lot of traders last month. And then the consensus is actually 225. This has shifted a lot this week. All right. At the beginning of the week, if you were watching my outlook, it was actually at 222,000. Now it's 225,000. Depending on your sources, you might get 224,000. But the estimate that we have, the range is actually between 225,000 to 250,000. All right, so that's the estimate for the NFP numbers. The unemployment rate is expected to drop from 3.7% to 3.6%, and I'm leaning towards that drop towards 3.6% because we actually have a lower unemployment claims numbers if we take a look at the average. So for that dollar yen position that I have, what I'm looking at right now is that either I get a number that meets the consensus at 225,000, or anything above 225,000 would actually be positive for the US dollar if accompanied by an unemployment rate that drops below 3.6%. So this one here takes a little bit of know-how in terms of the fundamentals, right? So just keep that in mind if you're trading that. The other one is the straddle strategy, and this is a strategy that a lot of traders use. It basically involves placing two pending orders, a buy stop and a sell stop, above and below the current market price just before the NFP release. Several ways to look at it. Last month was a little bit tricky because I placed the stop loss and the stop orders a little bit too close to one another. It actually triggers both of the stop orders, and kind of creates a little bit of a headache in terms of deciding which one to let go. So today we're gonna use a much wider range just in case, okay? But this way you can potentially profit from a strong price movement in either direction. So once one of the orders is triggered, you need to immediately cancel the other order to avoid being exposed to further market fluctuations. And this is something that we are going to be doing. So we'll focus on the straddle strategy just before the NFP number gets released. So we'll do that in probably 5 minutes leading up to the NFP numbers. But the other one, number 3, is actually fading the initial move, right? This strategy basically involves waiting for the NFP release and then observing the initial market reaction. So if I don't have an order, I can let the market go up and down, and it doesn't matter. And within the first hour, I will need to make a decision what to do with the market, right? Last month, and typically every other month, we saw a little bit of a window, and it's basically just about 1 hour, 1 to 2 hours, that we see market go into one direction following the NFP release, and then it kind of moves back to the starting point. Sometimes it kind of reverses itself, or sometimes it just gets rejected and continues on to the initial reaction that the market saw during the NFP. So with the NFP numbers, it's not going to be one way, or it's not going to be one directional most of the time, unlike the CPI numbers. With the NFP numbers, we actually get kind of a whipsaw. So if you do that straddle strategy, and that has to be something quick, right? You get in, you see enough profit, you get out, right? And then you wait for the fade to happen, and then you decide whether you want to trade again or not, okay? But once the initial volatility subsides, you basically look for opportunities to trade against the initial move. So let's say the market breaks the dollar yen to the upside, right? Once it has reached enough on the upside, I will actually close my position on the long dollar Japanese yen, and I'm actually going to be starting to look for a sell on the dollar Japanese yen, anticipating that the market is going to pull back to where it initially started. Now, with high impact news releases, it's actually considered to be a noise in the market. So what happens in the flurry, following the release of the data, is that we typically get short-term traders jumping into the market. They jump in, they get in quickly, they get out quickly. Once they get out quickly, and a lot of traders get out quickly, it will create a little bit of that reversal movement. It kind of neutralizes itself, it normalizes itself back to where it was before, deciding where the market's likely going to go. So the approach for this one is actually based on the idea that the market often overreacts to the NFP numbers, or they don't get the whole picture, so they'll react on the NFP numbers because that's the fastest thing they can react to, and then they'll read through the unemployment numbers, they'll take a look at all the average hourly earnings, and they say, hey, you know what, the NFP numbers is wrong, or something's actually wrong, something's not matching up, so it kind of retrace and potentially reverse itself. Okay, the last one is obviously post NFP trading. Several traders, maybe like me included, we prefer to be, or any swing traders who actually prefer to stay away from Fridays, and they'll come back to look at the market on Monday or Tuesday and decide, what happened. And this allows us to break down a lot of the details. We understand the numbers a lot more. So this one here, you don't actually have to rush, right? So it takes your time. We can make that decision on Monday or Tuesday, depending on what it is, or maybe even at night. Typically, we do that on Monday. So instead of trading during the release, we'll wait for the market to digest what the NFP is, and then look for trading opportunities in the hours or days following the release. What we're reading here is actually the sentiment. Whether or not market is actually happy with the NFP numbers. Okay, so this strategy allows you to avoid the heightened volatility during the release and focus on longer term trends that may emerge as a result of the NFP data. All right, we've got 3 more minutes and then we need to start positioning ourselves. But regardless of the strategies you choose, keep the following tips in mind. Manage your risk. Always use appropriate stop loss orders. Never risk more than a small percentage of your trading capital on a single trade. Stay informed. Keep track of economic news, forecasts, and market sentiments leading up to the NFP release to make better informed trading decisions. Be prepared to adapt your strategy based on the actual NFP numbers and the market's reaction to it. Okay, so the key point is be more flexible. All right, so let's take a look at the chart history on what happened. This is what happened on the 7th of April 2023. So we created a little bit of a range on the dollar Japanese yen. So we got 2 orders. We got sell stop and a buy stop. So this stop orders means if I have a buy stop at 131.95, if price goes to 131.95, automatically open with a long position. If the opposite happens, if a short stop is triggered, that means I'll open a short position, but this one here triggers a buy. But if you take a look at what happens here, it runs up, but it kind of reverses back to where that buy stop order is located, bounces off, and then runs off, right? So with this one, the NFP release is the actual is 236,000, consensus was 228,000, previous was 326,000. So very similar situation with this month as well. So last month was 300 something thousand, which is kind of a surprise to the market. We have consensus at 228. Consensus for today is 225, right? Very, very similar. So if we get an actual number that's actually above the consensus, even though it's lower than last month, it will still be good enough for the market and send the dollar very, very high. All right. This one here is on Friday, the 7th of April as well. This is on the pound USD, which is the opposite. So you can take a look at that one. This one here, the sell stop was triggered and you see the market move in one direction, but it fades back to where the stop order was triggered and before going back down. Okay, so this is actually on May. All right, the same thing on May happens. We've got the initial reaction. We got the sell stop triggered, market move in one direction, and then the fade happened. And the fade didn't just happen; it reverses on itself. So the fade kind could actually be a reversal to the initial reaction to the market as well. So this is what I say with a straddle strategy. You need to get in, you need to get out. So if you have a straddle strategy, within the first 50 minutes or the first half an hour, you need to make a decision. Should you get out or should you stay in the market? Typically, a lot of traders will be in that trade for about 5 minutes to 50 minutes and then just get out with whatever profits they have, and then they start looking for that fade to happen, and they'll actually go the opposite direction. This is what happened last month. This is on the Euro USD. So we got sell stop triggered during the NFP release. Take a look what happened here. Very sharp spike down, and then the market reverses back to the upper range. And this is where my buy stop actually got triggered because I don't have enough time to cancel out the buy stop. But anyway, hey, that's one of the risks involved with strategy. If the market moves too quickly, or if the spread widens, you might trigger your buy stop and sell stop at the same time. Okay, so market fades back to the starting point 1 hour after NFP release, and then goes to the initial direction, and it is a very huge drop to the downside for this one here. All right, let's go on to the market. And let's start marking up. I already got a buy position on the dollar Japanese, so I'm going to leave that one here alone. So next up is the Euro USD. We've got an established range, and this is something you need to keep an eye out for. It's actually 1.09. 1.09 is a very important key level. There might be a liquidity grab where price actually breaks through above 1.09 and then immediately reverses back. So you need to be a little bit more careful, but I think this is enough range, so I'm going to create a buy stop just above 1.09. For Euro USD, I'm going to create a sell stop just below 1.0865. I'm giving a much wider range. Some traders could potentially have a sell stop a little bit lower, just maybe over there, right? Really depends. I like to have it a little bit more, but you got 2 sell stops if you want to. And for the pound USD, this one it's pretty cool on this one here. We're looking at the 6th of July high at 1.2780. That's where we want to have our buy stop, just a little bit higher, because if we take in the intraday range, it'll be a very small range here. It will actually be a sell stop here or a buy stop there. But just for the sake of this example, I'm just going to show it there. You can have that smaller range, which is here, right? Or you can measure the much wider range just to be a little bit more safe and do that sell stop. So I'm going to create double orders for this one here, and also gold. So what we're looking at gold here is a little bit unique. We cannot identify that range because if we go into the 50-minute time frame, it's actually very hard to classify that range itself. We can create a buy stop here, but do keep in mind the positioning on gold right now is that this is more or less a selling area. So I'm actually going to have the buy stop a little bit higher at 1920. And in terms of stop loss, sorry, it's not stop loss, sell stop. I'm actually going to have 2. I'm going to have 1 at 1902. And then 1 more, maybe about 1910. All right. So I'm done for this one here. NFP is going to get released in 2 minutes time. So buy stop for the Euro USD, let me do that again. We got a buy stop at 1.0903. We got a sell stop at about 1.0875, and then one more at 1.0864. For the pound USD, you got 2 range. You can use the bigger range. That means having a buy stop at 1.2781 or a sell stop at 1.2725, right? Or you want to trade the smaller range, you can have that buy stop pretty much at about 1.2772 and a sell stop at 1.2750. So within 25 pips range on that. All right, the dollar Japanese yen, can you create a buy stop as well if you want to? Yes, you can. You can actually have a buy stop where my stop loss is located. So if price goes lower than that stop loss, I'm going to close out my position, and I'm going to have a sell position running for this one. And for a buy stop, I'm actually going to have this at about 143.50. All right, I think something got triggered, and I'm just going to be looking at the numbers first. Wow, that's a huge drop to the downside. But yeah. NFE number is 209. It is above 200,000, but below the consensus. Previous number was revised down from 339,000 to 306,000. Unemployment rate, as expected, went down to 3.6%. Participation rate is at 62.6%. Average hourly earnings actually went up from 0.3% to 0.4%. So the NFE number is actually not that bad because we're only missing the consensus by just quite a bit. But let's go back to the trades and see what got triggered. And we need to make a very quick decision on what to do here. Pound USD, we got buy triggered. And then gold. So I'm going to cancel out the pound USD. Right? Gold got triggered for a buy. I'm actually going to... Yeah, sell stop. I'm gonna get rid of this. Sell stop. Buy stop on the dollar Japanese yen. I'm actually still liking this. The stop loss got taken out. I think we got a sell on the dollar Japanese yen. So let's clear off the dollar Japanese yen. Euro USD, we've got a sell stop. Buy got triggered once. I'll get rid of the sell stop. Pound USD. I've got a buy, so I'm going to get rid of the sell stop. And that's it. We got our trades running. Unfortunately, it didn't work out for me on the dollar Japanese yen because of that spike that happened. But yeah, that's pretty much it. Now, if we take a look at the yen crosses, it's secondary, so the impact is actually going to be a little bit weird, right? We might not necessarily get the same reaction that could happen in the market. But initial reaction would be the... and obviously I get filled in pretty high over there. As I say, with news releases, the spread could widen. My buy stop got triggered before price on the chart actually happened. So obviously the spread widened. So that's one of the risks that you need to consider when you're doing a strategy on the NFP numbers. Right, Euro USD looking great, Pound USD looking great, Dollar Japanese Yen not too great because I still want to go long on the Dollar Japanese Yen, just more on a technical reason, but just for the example on this one here, doesn't quite work out, okay? But gold's working out great, everything's great. Now, look very carefully. This is just the first 2 minutes. We basically need to look at what's likely going to happen in the next, 5-50 minutes time frame. All right, so while this is running, let me go through the chat, see if there's any questions. Go, bullish, go. I don't actually care whether it's actually going to be a buy or sell. I just trade what I see when the numbers get released. So yesterday was a sell, that way today is a buy, so obviously that's not going to be the case on how the market works. Dollar strong for the NFP. The NFP is actually, look, I'll be honest with you, the NFP number is actually not that bad, and the unemployment rate is actually lower at 3.6%. Hourly wages went up to 0.4%. This is actually a very good data for the market. So be very careful with going short the dollar, because if I'm going buy on the pound, I'm actually going short on the dollar itself. So this is going to be a short, quick trade. All right, I'm not gonna keep this for a very long time because once we see enough profits, I'm gonna close out my positions, and then I'm actually gonna start looking at any potential reversals going on in the market. All right, stop losses. If you have your stop losses, you can actually have it at that lower end of the range. For the Euro USD, the Pound USD, also the same thing. Right, so have your stop loss. Make sure you have your stop loss. The dollar Japanese yen, obviously I need to have my stop loss up here. All right, and for gold, I would actually need to have one before the market runs up to the upside, but I'm gonna give it a little bit more room at about 1910. Okay, I'm running, everything is good and looks great. This is still running, looks great. Once it hits about 300, I think I'm actually gonna be closing out. And let's see what the numbers is. Yep, I'm happy. I'm gonna close out, and that's it. Voila, done. That's it, guys. In all honesty, that's that's pretty much it. That's how we trade the NFP numbers. If you want to stay, but just you need to know that this is something that people actually get in and people actually get out very, very quickly. So today, Not doing too bad, right? Gold, we got 250. A little bit of a negative on the dollar Japanese yen because I still have, I like dollar Japanese yen a lot more because the yen crosses works differently. I got 2 trades on the pound USD. Nets me about 63.50, so that's enough, right? We're not looking at crazy numbers here or anything like that. This is actually going to be short-lived as well. So because we're looking at a 15-minute time frame, and once we start looking at a much bigger time frame, it's obviously going to be different as well. All right, so that's that. As you can see, that's how we trade. We get in, we get out very, very quickly, and let's start looking at the more important stuff on whether or not we are actually going to be looking at a potential reversals or anything like that, right? Euro USD right now, where is it going to go? I think this could actually still go up a little bit more, potentially towards 1.0940. That's just about 10 pips. So I'm getting out now, not a big deal for me. I think I'm pretty cool on that one there. But overall, I think the initial market reaction is that, I think there's much more bullish sentiment. The pound USD reaches 1.28, very critical level. So I think there should be a little bit of profit taking going on. For the pound USD, the dollar Japanese yen slides down a lot. So this one here I got taken out. I actually have a running dollar yen position which just got taken out as well. So I think we are looking at a lower yen. Now let's take a look at the impact on the euro yen and the sterling yen. I also have a long on the euro yen, but if you take a look at the difference here, the yen works differently. The dollar yen drags the euro yen down. However, the euro USD props the euro yen up. So what we're looking at is kind of a neutral stance on the euro yen. A very similar situation on the sterling yen as well. Okay, but let's start measuring. Oh, this is actually a really good run. But I think we are looking at a potential resistance at 1.0940. Let's take a look at it on 50-minute time frame, see what we can come up with. I think there's actually one readily available fibs that we can actually use. So how far can it go? It would probably go to about 1.0942. So at about 1.0942, I might actually start looking for a short on the euro USD. Right, just keep that in mind. We're going to focus on the euro USD. We're going to focus on the pound USD. The pound USD also we actually have a fib that we can actually use to project our targets. Oops, I just deleted something very important. Right, I'll hide the sessions. Right, very close to 127.2%. Very happy with this one. Looking for a potential sell on the pound USD and the euro USD as well. Likewise, I'm actually going to be looking for a buy on the dollar Japanese yen. Let's take a look at gold, how gold reacts on the first 50 minutes. I think this is kind of expected that there should be a little bit of that resistance at about 1928. So, what should we do right now? We're actually going to attempt to short some of this stuff here. So Euro USD, I'm looking for a short on the Euro USD soon, not yet, because I think there's a little bit more room to go on the Euro USD. Just looking on the 50 minutes, I think the RSI still points to the upside. For the pound USD, I want to go short now on the pound USD, and you need to keep this very simple. We are going back to target where it is. In terms of stop losses, you want to have it a little bit higher than the initial reaction on the market. I know I'm jumping in a little bit early because we're just 8 minutes post a trade, but I just want to show you the potential on how we actually look for fades in the market. The dollar Japanese yen, you know what? I still like the dollar Japanese yen, so I actually want to buy the dollar Japanese yen. I really like the dollar Japanese yen. Maybe I'll have my stop loss just a little bit lower, below 142.50. So I'm gonna have it there. In terms of target level, for this one here, I'm actually still targeting about 143.50. Yeah, I think that's a good number. Gold, let's take a look at gold reaction here. Right now, we kind of highlight that 127 to 128 level as a potential resistance. So I'll attempt to go short on gold. I'll have my stop loss a little bit higher, maybe about 1928, just give it enough room. And in terms of going short on this one, I'll probably go for now about 1910. And that's it. I'm just trading the fade right now and see how it goes. I've got 3 running positions. Euro USD, not yet. I'm not too convinced on the Euro USD, but happy with the pound USD. Happy with the dollar Japanese yen. Happy with gold. and we'll just wait and see whether my stop loss got taken out or we are good for a reversal. Can you short gold? No. Very quick rejection on that 1927 level. So yeah, I think we can short gold. Just make sure your stop losses is above 1927, and we'll see how it goes. That's quick, huh? That's how we trade the NFP numbers. We get in, we get out. As I said, I think I've done the NFP numbers in 21 years times, let's say 11. That's a lot of NFPs I've been looking at. 21 times 11. About 231 NFP numbers that I've actually traded. So we are trading the fade right now, and we are in the money, obviously. So you can make a decision, and the reason why I like to have multiple assets, like multiple instruments to trade, I don't look at individual values, right? My pound USD could only be making $9, but the rest, gold is obviously making a lot more. So I'm looking at that nominal value right now. We were taking it at 300. So let's say, how about we go for 200, or maybe, you don't actually have to go for that target level to come back to, because we don't know. But I'm liking where it is right now, all right? Very close to 200. I think I'm actually going to get out at 200, and we could actually end the session a little bit early. Yeah, let's start standing by here. Come on, a little bit more, a little bit more, a little bit more. Come on. There we go. I'm actually going to get out. And that's it. I'm done. So I bought the straddle. I faded the trade. And I'm just gonna sit here and just wait. I don't care anymore. I'm already out of my positions. But if you are trading the fade right now, for example, for gold, you can leave your stop loss at 1927 if you want to. But this is how I trade the NFP numbers, and it's very quick. It's not complex. It's like get in, get out, get in, get out. As simple as that, right? But this is what we're talking about. The initial reaction. It's typically just an overreaction to the market. So if I were to break down the numbers again, the way I look at the numbers, the NFP number is still above 200,000, right? We missed the NFP number by maybe about 20,000 jobs. Not a big deal. The unemployment rate, which is important, went back down to 3.6%, and this is something that kind of anticipated from the slowdown in the unemployment claims, weekly unemployment claims. So we kind of know what it is. And then the average hourly earnings, it surprises the market. They actually went up to 0.4%. So no surprises here. And that's how it is. Pretty easy. We got it all done within the first 30 minutes, back and forth. But that's how we trade the NFP numbers. I don't trade the NFP numbers, but like, you know what? I'm actually gonna buy the NFP numbers and I'm gonna hold it for a long time. I'm not gonna do that. I'm not gonna start doing that analysis until about 1 hour or 2 hours after the NFP get released. So, in 1 hour's time, I'll come back to this, right? And I'll look at the market and see if there's actually any swing potential. However, I've actually made a rule that I don't actually trade on Friday during the US session once the UK market is closed. So there's no point looking at the market today. So I'll analyze that for swing trades on Monday. But that's how it is. That's how it works. So hopefully you guys get something out of this. Plus, there's a huge gap on the pricing here when it happens. So I think that gap needs to be filled anyway. So the dollar Japanese yen, as I said, I like the dollar Japanese yen a lot. And you know what? I think I'll open it again just because this is matching what I actually have on the dollar Japanese yen. I still want to target a little bit higher on the dollar Japanese yen, potentially even towards 144. This one here, it's more on very few technical reasons. The reason why I keep going long on the dollar Japanese yen, right? But the Euro USD, as I say, it just doesn't have enough oomph just now. That's why I didn't open the Euro USD for the fade. The pound USD is dropping down really quickly. Once it starts filling in that gap, I think that's when you should start getting out of that trade. Right? Pretty clear, right? And you see how quick that reaction is in the market? You see how quickly that happened? You know how things changes around very, very quickly. So I don't like the straddle. I'll be honest with you. You know why I don't like the straddle? Because I'm exposing myself to a few things. I could get a wider spread because a lot of people are trying to get into that positions or getting out of their positions. Spreads actually widen sometimes, and it could widen really badly as well. So I don't like that. I like the fade a lot more. However, with the fade, you really need to know a little bit more on the technical reason why you fade that trade, right? For example, on gold here, the reason why we fade that trade was because there was a resistance at 1927, 1928. It hits that, it's unable to go beyond that. Simple as that, right? The Euro USD and the Pound USD, very hard for me to show it here, but I'll show it here, and I'll show you the pivot. Right, it's based. There's actually a daily resistance one pivot on the Euro USD, and on the Pound USD, it's pretty much about the same one, resistance one, as well as 1.28. So there's a little bit of a liquidity grab on the 1.28 level as well on the Pound USD. Right, for the fade, I think you should be thinking about getting out as well, or start moving your stop loss to break even just to lock it in if you want to let it run. All right, because the fade can lead to two things. It could reverse the market, or it could go back to the initial point before the market reacts to that NFP numbers and then goes back in the same direction. So you need to be a little bit more careful. But the fade needs technical understanding of price patterns or price action in the market. If you don't get it, like, that 1.28, that could be a liquidity grab at 1.28. We need to kind of classify that, like the dollar Japanese yen, obviously very sharp rejection, bounce off 143. Why? Because a lot of people are actually waiting for 143 to happen. A lot of traders are actually lining up to buy the dollar Japanese yen. So you need to have a reason why you're actually fading that trade, right? I don't like the initial market reaction, because to me, the initial market reaction is wrong. The NFP numbers, although it's lower than what the market is expecting, at 209,000, expectation was 225,000. The previous month was revised down. It was 339,000, and then it was revised down to 306,000. So we're not actually looking at a huge drop, right? 339 minus 306, and then 225 minus 209. The new number still offsets the drop that was revised down from last month. So I don't think the NFP number is actually bad. Plus, it's still above 200,000. The unemployment rate went down to 3.6%, which is what I want, and this is why I think it's really important. And then the surprise would actually come from the average hourly earnings. Month on month, it went up 0.4%. Year on year, it jumped from 4.2% to 4.4%. So, again, huge. This is huge because the average hourly earnings hasn't been going up for a while now, right? If we take a look at the average hourly earnings here, you can take a look at this one here where it kind of averages, right? About 0.3, 0.4. It's just around there. So I think this is a good thing to look at as well. All right. So going back, I'm happy with my dollar yen. I think I'm gonna keep my dollar yen position running. I'm just happy that price manages to grab that 143 level, and I think from a technical standpoint, I'm just happy with that dollar yen. So I'm just opening up my dollar yen. Even though I closed it again, I just reopened it again. Not a big deal. The Euro USD, not really too convinced with the Euro USD that this is actually gonna fade a little bit lower. So I'm actually gonna stay clear from the Euro USD. The Pound USD, I think we need to fill in that gap as well. Gold, a very sharp rejection in 1927. Price is about 1919. So this is actually a lot, guys. If you manage to get gold on that reversal at about 1924, right now you should be in for about 400, 500 pips, which is enough. I'll be honest with you, I think that's enough for an NFP night. Okay, so yeah, that's how it is. We go in, we go quick, we get done very quickly, and we had a great night. I think we had a great night. Again, because we opened multiple positions, I don't care if some of them is negative. I'm just looking at the total tally, and I'm happy with that. So, like, 1050 on the Euro USD, that's basically 2 pips, right? Because I have a half standard lot. 63 on the Pound USD, negative 41 on the dollar Japanese yen, which I don't really like selling the dollar Japanese yen to begin with. We got gold to the upside 249, and then we buy Dow Japanese yen, we got 33, sell gold, we got 135, sell pound, we got 30.50. Overall, tally it up. It's a great night, and that's how it is. That's how we trade the NFP numbers. Get in, get out, and be done. All right. So this is the promo code that you can use. It's Nonfarm 2023. So the code is actually valid until I think the end of the year. But yeah. Nonfarm 2023, if you want to deposit onto your OctaFX account, you want to get double-digit deposit bonus, which I think you should, right? So use the code Nonfarm 2023 for that as well. All right, any questions so far? Well, I'll go through the chats. I know I'm going very quickly. Hopefully you guys are keeping up with how I do it, how quickly we do it, because as a trader, we just need to be that quick, right? We need to make that instant decision whether we need to buy or we need to sell. All right, so let me get some water while I read through. A lot of gold traders. Hopefully you guys are happy with today. I gave you several gold trades. Dollar strong, gold fall, but it's Friday. There's possibility of manipulation. I don't believe in manipulation in the CFD market, especially, not in the forex market. Someone manipulating the market in the forex market, that's crazy because it's 7.5 trillion market a day. So not even the Bank of Japan could actually kind of manipulate whatever it's doing without coordinated intervention with the US right now. My videos about psychological price level is very simple, but that works very powerfully. Yes. And that's why I like psychological numbers. It's just because we are humans, right? Psychologically, we are somehow conditioned to those numbers as well. What's my view on the dollar Canadian? I'm looking out for a sell to 1.3275. 1.3275. By all means, if you're on the other time frame, go nuts. 1.3275 is a little bit too far. Just be mindful. The RSI has been dropping down very, very quickly. I think you need to... 1.3275 is all right. But I think you need to be careful about 1.33. That's where the support one is located as well. So be very careful at 1.33. You might need to make a decision whether or not you should get out 1.33 just in case any bounces happen at 1.33. But now stay away from the market until news is released, or if you may go into the market using the straddle strategy. Yes, pretty much. We need to keep up the bearish momentum for gold. Yeah, could you explain again about the unemployment and the NFP result? I think I already explained that. NFP drop out of expectation while unemployment dropped while the expectation is correct. Yes, but the NFP number, as I say, it's not that bad because with the NFP numbers, let's go back again. Let's take a look at the NFP numbers. There's actually a revision. This one doesn't show it here, but let's take a look. There we go. So on May, the actual number was 339,000, right? But during the June release, it shows up as 306,000. So there's a revision from 339,000 to 306,000. The consensus for today was 225,000. It came in at 209,000. It's still above 200,000. And if you take away 225 minus 19, 225 minus 209, we get 16,000, right? That's the difference. That's 16,000 below consensus. The previous month, however, was revised down from 339,000 to 306. That is 33,000. So 33 minus 16, that's a little bit of a difference of 17,000 from that downward revision from last month. So the number is actually not that bad. Kind of offset it, right? Because last month it was revised down 33,000. This month's number missed the consensus by 16,000. So overall, if you count in the revision, it's actually not a bad number at all, in all honesty. Okay. All right. If you have a pound long position around 1.27, can I make it a swing? Really depends right now for the pound USD because Remember what we're trading right now is the fade, right? So with the fade, there are a couple of things. See, the reason why I get out very quickly is that market would attempt to start going up again, because I think a lot of people are still looking. To me, the numbers looks good for the US. But to a lot of people that just, maybe start opening up their charts and they just look at the NFP number, they just finish dinner, they look at the NFP numbers and they only understand the NFP numbers, and they'll say, you know what, that's bad for the US, let's take it up. So no, I don't think that should be okay for a swing trade on the pound USD, because we're reaching the limit at 1.28, and even if you swing it, where are you going to go? 1.2850? We are approaching the end of the day here, and resistance is at about 1.2840. So I don't like holding a swing after the NFP numbers. I like to wait until Monday to make that decision. I kind of like the fade strat. I like the fade strat a lot more. Number one, I don't have to deal with the crazy spread, right? Sometimes like you saw what happened, right? The Euro USD stop orders was up there. It got triggered because the spread widens and it takes me out, right? Sometimes it could happen in a good way, in favor, in whatever you're doing, in your favor, right? But sometimes it could work against you. So the straddle, you need to consider that. Sometimes there could be a delay in terms of your orders getting filled. Sometimes you need to deal with a higher spread. But with the fade, at least we have enough time, right? Not everyone is going to have enough time to process that information as quickly as I can, but I've been preparing for it. I've been looking for, I've been creating possible scenarios throughout the day, thinking like, okay, if this happens, that's likely going to happen. If that happens, this is going to happen, and stuff like that. And I'm keeping the key levels, from a technical standpoint. I know where price action is going to be, where the psychological levels are going to be. Those are stuff that needs to come into play when you do the fade. So it's a little bit more technical. If you are a beginner, no-brainer way to trade it, obviously, is a straddle. Simple as that. But you need to get in, you need to get out very quickly. Don't think that, oh yeah, you got it. And you got $100 in your bank, and you say, you know what, I don't want $100, I want $1,000. So you leave that position running, you are likely going to lose that $100 that you have, and you might end up with a negative, especially if you don't have a stop loss. So be very careful. All right, Aussie USD. Let's have a look at Aussie USD. But any questions regarding how we trade the NFP numbers? Because I think that's the whole point with the NFP numbers. The Aussie USD, I think I'm still in for a short on the Aussie USD. I just think the Aussie USD is overall generally weak as well. I think today we talked about the pound New Zealand. Did anyone get in on the pound New Zealand from today's marathon? But if you do, just a reminder, it's already up and running for the pound New Zealand as well as the pound AUD as well. So yeah, it should be good. If you trade the pound New Zealand and the pound AUD, you should be good on this one here. The Aussie USD, I still, have that stop loss a little bit higher, just at 66.60. I think that makes a little bit more sense. I still want to target anything lower than 66 cents on the Aussie USD. So I think, I'm still looking for that short on the Aussie USD. Thanks for this session. Can you repeat the reason why long on the dollar Japanese yen? Can we use the same for Japanese yen pairs? You can use it the same way. For example, like you want to trade the euro yen and sterling yen. You can do it the same way, because I already have a running position on the euro yen as well, which was stable. Didn't get my stop loss taken out. And then on the sterling yen, it's basically the same thing, but you just need to know the limit, how far it can go. It's likely going to go towards somewhere between 183.30 to 183.50. The reason why I'm going long on the dollar Japanese yen is that there's 143 there, right? And if I were to zoom out and show you a few things, what happened with the short up there is actually a short at 145. See this candle over there where it touches 145? Sellers are actually waiting at key levels like this, and this is why you don't place your stop loss exactly at a psychological price level. You don't ever have a stop loss placed at anything that ends with 00, 25, 50, and 75. These are psychological levels. These are levels where institutional buyers are going to keep an eye out on these levels. a lot of traders that don't care about the small numbers are actually going to look at these psychological levels and say, you know what? If it bounces off 143, I'm actually going to buy at 143. If it drops all the way down to 143, I think it went too far. I want to buy at 143. And that's basically just a logical reason. And it's more of a price action reason on why we want to go long on the Dow Japanese yen. So I like the Dow Japanese yen long, and that's why pre-NFP I already have the Dow Japanese yen long. It's just that the spike that happened during the NFP numbers took out my stop loss, which is good because I got my stop loss at 142.80. Otherwise, I could get dragged to 142.60 and maybe even lower. I don't know if it doesn't bounces back up, but it does bounces back up. So 143 for the Dow Japanese yen right now shows a very strong sign that buyers are there at 143 waiting just to buy the Dow yen at a cheaper price, and they might take it back up to 144. They might get out at 145 because at 145 everyone's going to be afraid that the Ministry of Finance is going to start an intervention again, so they'll clear out their position again at 145. I've explained that result 3 times, man, but just one last time I'll explain it again very slowly. The previous NFP number was 339,000. It was revised down to 306,000, so that's a difference of 33,000. So they basically cut down 33,000 jobs just to get a revision down. The consensus is 225,000. We get 209,000. So that's basically negative 16,000 from the consensus. But if you take the revision from 33,000, the previous month was revised down by 33,000. It outweighs the drop below the consensus of 16,000. So technically speaking, the NFP number is actually still good. It's 209,000. It's still about 200,000. Take into account the revision, the number is still good. Okay. The unemployment rate also dropped to 3.6%. So we have a very healthy employment sector in the US. The average hourly earnings went up from 0.3% to 0.4%, which is good. People are getting paid more for their average for their hourly jobs, and the yearly average hourly earnings went up from 4.2% to 4.4%. So people are actually getting paid more. So that's good. A lot more people are employed, and they're getting higher pay, which is good for the U.S. economy, and could trigger a little bit of a concern in the market. But that's to be considered how the market reacts today. Okay, but the initial reaction in the market, how we trade the NFP numbers, that's the whole point for tonight's session. Hopefully you guys get that, and I'm very happy with my long Dow Japanese yen. I like to keep that Dow Japanese yen. You guys that short gold should be laughing to the bank right now. Very happy for you guys if you do that. Just make sure you start moving your stop loss to break even, just in case, because you're trading the fade. We don't know if it's going to reverse or if it's actually going to bounce back up again. The Euro USD, no go on the Euro USD. The Pound USD, be very careful once it fills in the gap. The Dow Japanese yen, very happy to go long, right? For gold traders specifically, start moving your stop loss to break even if you have a short position on gold, or you might want to scale out some of your position. All right. Cool. That's a wrap. Pretty easy. All right. A lot more explaining. The whole action in terms of trading only takes what 8 minutes. But that's what it is. We did it all in the first 50 minutes, up and down, whatever. Doesn't matter. We trade the straddle. We trade the fade. You guys can keep whatever trade that you still want to keep. I like to keep my Dow Japanese yen. Some of you guys want to keep your gold. Feel free to do so. All right. Thank you all. Have a great evening. It's been a wonderful session. I'll see you on Monday where we talk more about news trading. And then on Wednesday, we'll have a live CPI sessions. Very similar to this one here. We'll be trading CPI live as well. All right. Have a great, fantastic weekend ahead. Stay safe. Good luck with your trades if you're still trading tonight. Anyways, have a great time ahead. Enjoy your weekend, guys. I'll see you soon. Stay safe.